Good day, traders. I trust you are well. It's been a while, been away for a few weeks, but I trust everyone is all right. Just check sure my settings are fine here. All right, so I was in a meeting just now with a couple of people, and a couple of guys had an issue with connectivity. So, just put a note somewhere if you can't hear me, and I can try and adjust things. I'm at a business park and bad network at home and stuff like that, but hopefully we should be fine. All right, so having a look at UK 100 presently. Kind of market that we have had so far. I'll pop in and also show the DAX index just now, the German index, looking at both and looking for ways for us to optimize. Just check that. All right, great. If you can hear me, sincerely, I appreciate it. We'll just keep plugging away. So one thing I want to just mention before we get started, a couple of guys have just sent me notes in terms of some of the guys are on this in this webinar, and some of them are just notes that I get off our YouTube broadcast. And one of the things you've wanted to understand is how we the differentiation between trading off a lower time frame and a higher time frame. Now, the only difference is, I guess, your ability to, your time availability is the one thing that's absolutely important. Are you available to trade for long enough time on a lower time frame, or in the lower time frame goes from 5 minutes all the way up to just less than a day, right? Are you able to sit in front of your screen for a long duration or not? Are you able to come in every 15 minutes, every hour, every 4 hours? If you can do that relatively consistently, I mean, there's times that you're not going to be able to jump in the market, and that's perfectly fine. But if you can do any of that with relative consistency, then you are fit to trade a lower time frame. Okay, if you can't do it with reasonable consistency, in other words, if you find that you are more out of the market than you are, then just try and scale up to higher time frames. The reason for that is that the time that you spend in the market is going to determine the opportunities that you have to make money out of the market. If you don't have the time, if you work in full time, and don't have sufficient time to be in front of the market, then trade off the daily or trade off the weekly. You could trade off the 4 hourly and just kind of forego. I mean, normal work is, let's say, 7 to 10 hours. So you might miss a candle change in between. And if you find with that, having placed your trades in the morning or end of the day, then that's perfectly fine. Just stick with that and move with it. So hopefully that answers that. It really comes down to personal preference. Now, looking at this market that we have presently, that level right from the open was the high of the day until we just breached above it. Okay, I'm not sure when I put in my markers, if you can see it. Some guys can, if you don't understand it, some can't. So we've had a failed breakout above it with that 2-bar reversal. Okay, and that, we could mark that again as that became the new high. That became the new high of the day. And okay, so high of the day, tried to break above it, failed. We've just tried to break above it again a couple of times. So now with what we are looking at, we have, the market tried once, tried the second time. try the third time, all of this is right next to each other. So, you could consider that as part of the same structure that you're looking at. Now, you got to wait. It depends how you want to trade. If you want to take early trades, you can do that. Alternatively, because market is going up, you want to see a little bit more confirmation. You can wait to see a little bit more confirmation of bear strength before you jump in. If you're comfortable with the strength that you've seen already, then jump in and manage your trades. So we'll pop back and have a look at that shortly. Another market that's kind of doing almost the same thing is the DAX 30, German 30. Different markets, but sometimes they are pretty close. Parallels that are unfolding in this market. So again here, UK open. What I should actually have done on the other chart for you, which I'll do very quickly because there's still time in the day for you to go and put this on your own charts, is just to mark the open of the UK markets. Now, you might say, okay, you're marking the open of the UK market, but how about the open of the German market? Okay. On German 30, it's a key one to also mark, and that opens an hour earlier. And an hour earlier is just on this candle. So I have found that, if you trade in this particular market, you always need to be consistently aware of not just when the Frankfurt exchange opens, that's the German market, when that opens, but you got to have at the back of your mind that there is another huge exchange that is going to open, and that's the UK markets. So whatever decisions you're making here, just bear in mind they might be affected by this huge move. Just like when you get to the afternoon session, it's always just to bear in mind the opening of the US markets, because that will have likely to have a huge impact on the market. So here, unlike what we had on UK 100, so UK 100, you can distinctly see 1, 2, 3 attempts to get to a new level. Here, you have that attempt, that attempt, that attempt. So within here, I'm going to draw the lines, and sometimes it can get quite clutter our charts, but that's not a problem. So there's 1, 2, and at that point, the bears had the opportunity to turn the market. Why would I say they had the opportunity to turn the market? Because at the third attempt, the market looks at least, or there's 2 attempts, double top. And the market, if the counter trend guys are strong enough, they're going to look at the third attempt and try and reverse that. We went past that, and then they came back and they did manage to close beneath the EMA, but the market was still strongly up. So all of that pattern failed here. Then at this level, pretty good move by the bulls. And here's what's interesting. The bulls had the goal to get above the high of yesterday. That's the objective. That's what they were pursuing. But when you got there, I mean, this is as close. I mean, when I draw this line, I just do that, and I just say, well, there is the high of yesterday, and I plonk the line there. So you could be a little bit more accurate with it. But what is interesting is if you look at this unfolding pattern, went up once, bears came in, went up again, bears came in, went up for the third time, bears came in. So within this little pattern here, we have 3 attempts by the bulls to get above the high of yesterday, which is absolutely significant. I mean, everyone's watching that, because if the bulls are strong, they want to get above the high of yesterday. If guys are trading the, off the daily, they probably have orders at that level. And if the market gets sufficiently above that and triggers those orders, then it's going to pull up the whole market. But to see 3 attempts being rejected, it means the bears, the bearish forces that are trying to stop the market from going there at this level are pretty strong. Doesn't mean, no, we don't know whether they'll be strong for the rest of the day, but at this level, the bears are pretty strong. Now, if the bears are pretty strong, excuse me. The bears are pretty strong, then what we want to see is, of course, follow through of this little pattern. There, the bears had follow through. Thick blue line is 10 EMA. The lighter blue line is a 20 EMA, and we stalled at the 20 EMA. That's where the market stalled. And since then, it's been two-sided price action. Two-sided price action, trading range. What does that mean? It means we are in breakout mode. At some point, one of the sides will break out. Either the bulls will break out or the bears will break out. And if they do that, if whatever side does that, their first objective. So this is a trading range. I mean, you can mark the highs and the lows, and I'll show you something else that you could do shortly. You could say, okay, if the bulls eventually come back and try and break above this, that's where they want to go. And where do they want to go? Well, evidently, they want to go above the high of yesterday, which is the objective for the bulls. I mean, if you are a bull and you are in this market and you are here, your objective is to get above the high of yesterday. For the bears, of course, they don't want that. And their objective is to try and get beneath this trading range, at least break out beneath it. So then we go to the top, they sell off, we can get into the bottom, there's been buying. So someone is going to have enough strength to break out and do something. Okay, so just a quick look again at UK 100. Well, we kind of spoke about that. The bulls, the market is bullish. We're above the high of yesterday. The bears have a lot of work if they want to try and turn this around. They need to sell off and get down here. But all of this is going to be defended heavily by the bulls. The bulls want the market to continue going up. So that's the kind of direction that we're looking at. Let me just have a quick look. Okay, so I've just pulled up, I've left the other 2 markets that you typically look at on the monthly, just to have a closer look at these 2 markets to see if we can get a little bit more insight. One of the other things, by the way, that has come through from the guys is, can we spend a little bit more time on one chart instead of flipping through different charts so that we can kind of follow the price action? We can only do so much in 15 minutes, but I hope that's given you a bit of insight. And for the guys who are going to be joining me for the couple of hour session coming up at the top of the hour, we will dig a little bit more and just try and track these a little bit more as we go along. All right, guys, if there is no other question, let me hold on. Before we go. Just a couple of other things for you that you probably have noticed. So that's the open, that's the low. And interesting enough, the open of today was exactly the midpoint of yesterday, because yesterday ended up as a deep pullback. And after a lot of sell-off, it was a deep pullback. So we opened at the middle of the day, so which kind of makes this a whole trading range day. Even if the bears sell off all the way to here, on the daily chart, we are just in a trading range when we get there. The bears, of course, if they're strong, would want to keep selling off all the way down here. Whether they can do that in this session before the US markets open is something else. on the UK 100. We opened higher than the middle of the day, so bullish day. So the bears have been trying to reverse that all day. And the bulls have the opportunity to keep defending that. Even if the day ends up like that, it could be, a bull candle day, bull day, with a tail on top. So that's kind of the opportunity. All right, guys, thank you very much. We shall catch up again. And Marlon in the office, thank you for hosting. Thank you, everyone. Take care. Bye-bye.